Is it a buyer's market or a seller's market? Oh, both. Who said both? Jesse, come up here and tell me what you mean by both.
Adam
Adam, what do you mean by both?
Adam's like, Jesse, take one for the team.
That was weird. I heard the voice and I saw Jesse nodding. What do you mean both?
Both. So yeah, we're seeing is there's a lot of activity in the lower price points. So 400 and below, it feels like we are definitely running into multiple offer situations, a strong seller's market. It's pretty competitive up there, pretty low inventory because everything's getting snatched up pretty quick. And then on the upper price point, 500 and above, inventory looks like it's aging. A lot of the higher interest rates has pushed a lot of those potential buyers out of that market and into the lower price points. So that's a very strong buyer's market up there where they tend to be able to take their time and have the upper hand in the negotiation process.
Yeah, excellent. Give them a hand. So look, in terms of context, it'll feel like there's more inventory. If you compare this time period to last year at this time, inventory is actually up 23%. Now, I want to share with you a couple of slides, okay? Sales are actually down 36% year to date compared to last year, okay? Let's look at some other metrics. Days on market are up 83%. Sold price is actually down. Median sold price year to date is down 7.7%. Now, a moment ago I shared with you that year to date solds are down 36%. If you look at just the last 30 days, or if you look at this last 30 days, solds are only down 10%. So we've really seen a lot of momentum just in this last 30 days, both with inventory coming on the market and with transactions closing. So look, what's the point of all of this? The point is that transactions are happening. And what you've got to do is you've got to get out in front of, a year ago I was talking about several things. We talked about, yes, house prices will likely drop up to 10%. That would be normal. That would be consistent with buyer activity, right? Less buyer demand, and as more inventory comes on the market, that's good for buyers. I think buyers are starting to recognize that. I think buyers are also starting to accept that it's not likely that we'll see mortgage rates below 5% in our lifetime. It's not likely. We'll definitely not see 3%. And so I think buyers are starting to adopt the fact that this is sort of the new norm. The Fed has been indicating that they're going to continue to raise interest rates, or they're going to continue to raise interest rates, yes. And, that may or may not have an impact on getting buyers sort of motivated to act now. So we're in the spring buying season, which is the normal seasonal cycle of buying. We also have tax returns. People are getting their tax returns, so this is generally a time in the market where there's a jump on buyer activity, on mortgage applications pulled. So we have seen that uptick a little bit. So now's the time to be super, super active, and also talking to your buyers about the fact that it's more likely that interest rates will continue going up than it is to go down. Anybody be willing to venture an opinion as to why it's